Hello, this is James Heller, and I'm out in the park today. And I wanted to cover a deal that we closed just last week that had a lot of little complexities to it, and just share how we were able to create a little bit of value for a homeowner that was in a tough situation. So to get started, this was a subject-to transaction, and we actually bought this property out of probate, meaning that the owner had unfortunately passed away, and it was a VA loan that they had, and the home was in foreclosure. So we bought a sub-to probate VA foreclosure home, and we had to do it pretty quickly. So one of the great things about sub-to is that you can buy houses for a lot more than most people can pay, because you're taking over a mortgage that somebody already has, and typically it's at a much better rate than you could get today. Rates are probably at about 8.5 today. We were able to take this mortgage over at 4.5%, which is great because the house sat on the market for a long time. 60 days, and it's in pre-foreclosure, so you can imagine that the seller was starting to get pretty nervous. The agent was starting to be upset that it was just sitting there. They got lots of lowball offers, and the truth is they had only bought the house a year ago, so the value had come down a little bit in that time. So they had negative equity, but they had a pretty attractive interest rate if somebody's willing to take over the house sub-to. So we were able to buy the house. We got the seller, who was actually the estate of this person, some cash at closing, and we got the agent paid their commission, which is awesome because they were starting to worry that they weren't going to be able to sell it. House was just going to go into foreclosure, and that would be it. I mean, agents only get paid when they get the deal done. So that's something that we were able to offer for them. So one of the big benefits of working with the Atlas portfolio is we can provide creative solutions when a traditional sale just isn't going to work. And in this case, there wasn't enough equity in the home for him to sell and pay off the entire loan balance that his sister owed on the house. So by working out this sub-to transaction, we had a win-win-win situation where the seller walks away with some money, gets to pay off all their debts, the agent makes their commission, and we made it nice and easy for them. And for us, we got to take over a fantastic mortgage at 4.5%, and now we have a house that's in turnkey condition and makes a perfect rental. Can do whatever we want with it. We have it at 4.5%. So there are a couple of things to keep in mind when doing a sub-to transaction. And there's one word that has become sort of the boogeyman of creative finance, which is the due on sale clause, which basically says that when a home is sold, even if the mortgage isn't paid off, which is what a sub-to transaction is, the lender can request for the entire loan to be paid off at one time. Okay, doesn't happen very often, and the reason is this: that lenders don't want their money back, right? They make money by lending out their money and by earning interest. So for the most part, it doesn't happen. It may be a very small portion of cases, maybe 1%. It does happen, and it's something that everybody needs to be prepared for, right? So the seller needs to understand that it's a possibility. If you're the buyer, or if you're assigning it to another buyer, they need to understand that it's a possibility. There's a few things that you can do. First of all, I recommend closing in a land trust. What that does is that the sale isn't actually recorded publicly in most states, or at least in our state. And beyond that, it provides some anonymity. So you'll close in a trust that'll be called generally name of the property trust. And this is pretty common thing that families will also do. Like if mom passes away and then dad takes over the loan, something like that, they'll probably put it in a trust. And typically lenders don't ask a lot of questions when that happens. They just assume that it was an inter-family transfer, no worries, they keep getting their payments, all good to go, okay? So I do recommend structuring it that way. If for whatever reason due on sale clause is called, there are still a few things that you can do. And the number one thing that I would recommend is have an agreement with the seller that if the due on sale clause is called, you can actually deed the property back to them, which would fulfill the lender's requirements basically. So that would bring the loan back into performing status, and then do a lease option on the property back from the seller at the same terms that you bought on sub 2, if that makes sense. So the only downside here is that you no longer actually own the home. You basically have a long-term lease with the option to purchase the home down the road. But it's the exact same terms, it works the exact same way. The only drawback is that you don't have the depreciation benefit that you would if you actually own the home. So that's it in a nutshell. This was a very, very complex transaction to close because there are so many people involved between the lender, you have the foreclosing attorneys, you have the public trustee's office who handles the foreclosure, the seller, the buyer, the agent. So there's just a lot of moving pieces, and everyone needs to kind of stay on the same page during the entire process. So this is the type of transaction that the Atlas portfolio specializes in. We do lots of cash sales, but we also do creative financing, subject to, we do seller financing, all different tools in our tool belt to help sellers and to help agents get deals done and make the most money possible. All right. So happy to answer any questions that you have. Please reach out if you have any deals that you're having trouble selling or the seller's in negative equity situation. We're happy to look at the deal and see if we can do anything. But until then, I'm James Heller. My company is the Atlas Portfolio, and we'll talk to you next time.